You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 11th day of May, 2026. Hope you had a great weekend, a wonderful Mother's Day, and to all the mothers out there, happy Mother's Day, belated, but nonetheless, hope it was a very special day for all you ladies. Thanks for tuning in today, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That is reserved for members only, those who are taking their 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only got to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. There will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, a lot more. Obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. At the top of the hour, 1 p.m. Eastern, Michael will join us for a recap of everything that happened this morning in the live training room, and then do a little live trading as time and the markets permit. But we'll get started right now, where we always do, with our daily devotional. The topic that we've been on for a few weeks, and we got a few weeks to go: everyday faith. Today's scripture is Psalm 23, verses 3 and 4, from the NIV translation. He refreshes my soul. He guides me along the right paths for his name's sake. Even though I walk through the darkest valley, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Again, that's Psalm 23, verses 3 and 4. He leads me in the paths of righteousness for his name's sake. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Now, Psalm 23 does not promise the absence of valleys. It assumes them. David does not say if, he says even though. The shepherd's leadership does not end when the terrain becomes dark. In fact, the valley is still described as part of the path of righteousness. Notice why he leads: for his name's sake. The guidance of God is not primarily about your comfort or mine. It's about his reputation, his faithfulness, his glory displayed in how he keeps his own. The valley, then, is not a lapse in his oversight. It is not evidence that you stepped outside of his will. It remains under his shepherding. Sheep do not choose the route. They trust the one who sees further. In the valley, shadows stretch long, visibility shortens, fear feels reasonable. But David does not ground his confidence in explanation. He grounds it in presence. You are with me. The pronoun shifts in the valley. Earlier in the psalm, David speaks about God in the valley. He speaks to him. The distance closes. The theology becomes direct address. Some awareness of God can only be learned where control is stripped away. The shepherd does not abandon the flock when danger approaches. He walks into it with them. Rod and staff are not decorative images. They are instruments of protection and guidance. If the shepherd is present, then the valley is passage, not destination. It has boundaries. It has an exit. It is measured under his authority. You may not understand why this terrain is necessary. Psalm 23 does not attempt to explain the architecture of suffering. It asserts the constancy of the shepherd. He leads for his name's sake. He remains for your good. Those are not competing realities. The glory of God and the care of God meet in the shepherd who walks beside his people. Question: where are you tempted to interpret a difficult season as abandonment rather than shepherding? That's something worth meditating on. Let's pray. Heavenly Father, shepherd of our soul, keep us under your hand. In light or shadow, Let your name be honored in how we choose to follow you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, there we go. Currently, the Dow is down 15 points. NASDAQ is up 96. S&P 500 up 23. And the Russell 2000, our man in the street, up 21 points. In the commodity basket, crude oil up $2.60, trading 98.02 last. That's a gain of just over 2.5%. Gold up $12.40, trading 47.42 last. Silver up $5.93, trading 86.79 last. That's a gain of 7.25%. And let me remind you, with silver, when the price of silver moves $1, that's worth $5,000 per contract traded. And again, silver's up $5.86 today. Call it $6. That's a $30,000, almost a $30,000 per contract move from where we closed on Friday. In the Asian markets at the close, the Nikkei dropped 295 points. Shanghai rose 45, 1%. The Hang Seng gained 13. And in the European markets at the close, FTSE up 36, the DAX up 16, the CAC down 56. Not a lot of movers and shakers. Things are kind of quiet. I think we all know what's about to happen. Yeah, it's about to hit the fan. I got up early this morning, turned on the news to see if it had happened while I was sleeping. And it hasn't yet, but it's coming. And Wall Street feels it. So, anyway, we had a mixed day in Asia. It was a mixed day for the UK. And because the Dow is now down only 3 points, it's a mixed Radio Monday here in the US of A. So let's take a look at the news. Then we'll go to the alerts. Then we'll go to the charts. President Trump called Iran's response to the U.S. peace proposal totally unacceptable. Further details on the negotiations were not publicly available as of this writing. The negotiations come amid a month-old ceasefire that President Donald Trump says remains in effect despite recent strikes. United Arab Emirates and Kuwait said they intercepted drones yesterday, while a drone attack sparked a fire on a commercial boat near Qatar. The U.S. and Iran exchanged strikes last week, with the U.S. targeting Iranian-flagged ships and Iran striking U.S. destroyers. A leaked CIA assessment last week found that Iran could weather a U.S. blockade for 4 months before suffering severe economic pressure. Separately, Israeli strikes in Lebanon killed more than 30 people over the weekend. Lebanese health officials provided that information. The countries are slated to meet in D.C. on Thursday for another round of U.S. mediated negotiations. President Trump, respectfully, please get the job done. Hungary's Peter Magyar was sworn in as Prime Minister Saturday, ending Viktor Orban's 16-year rule of Magyar's landslide electoral victory last month. The center-right politician was once an ally of Orban, but broke from his Fidesz party in 2024, accusing the government of mass corruption. Now Magyar has pledged to strengthen relations with the European Union and unlock $20 billion in frozen EU funds. He's also pledged to tackle corruption, reinstate checks and balances in Hungary's institutions, and suspend the public broadcaster seen as loyal to Orban. Like Orban, Magyar has called for strong border protection and is opposed to accepting asylum seekers. Last month's election saw a record turnout, with nearly 79% of eligible voters casting ballots. Magyar's Tiza party won more votes and seats than any other in the country's post-communist history. And company officials from the widely used education app Canvas said service has been restored to the platform following a series of cyber attacks last week. The hack prompted dozens of schools to delay finals and compromise the personal information of as many as 275 million students and employees. Canvas serves more than 40% of North American colleges and universities, acting as a digital hub to access and manage curriculum, take exams online, submit and track grades, and much more. After resolving initial security incidents by Wednesday, a ransom note appeared Thursday, prompting officials to shut the platform down. The note was signed by Shiny Hunters, an international cybercrime ring responsible for pay or leak extortion schemes against companies such as Google, Workday, Louis Vuitton, and AT&T, which reportedly paid $370,000 as ransom in Bitcoin. We use Canvas. Well, we got all-time historic highs again today in the S&P 500. Be careful, guys. And when it happens, okay, don't come unglued. The market will recover, okay? It's not going to go up forever. Well, actually, over time it will. That's why we like the indices, because they do always go higher over time. There's sell-offs and all that, but we might even have a little mini crash in the making. But worry not, it will come back. On Friday, the S&P 500 closed 7.7% above its 50-day moving average, yet only 52% of its components closed above their own 50-day moving average. In the past 30 years, the S&P 500 has never had fewer than 55% of its components above their 50-day moving averages, when the index itself was at least 7% above its 50-day moving average. So, I know it looks good, but just be ready for it when it happens. Since 1990, Friday's session was just the third time ever that the S&P 500 had more new lows than highs on a day when the S&P 500 itself made a new high. Okay. I don't want to worry you, but I just want you to be aware. Okay, this is not your father's market. We had one high-impact news event today. Existing home sales were essentially flat in April, rising just 0.2% from March as high mortgage rates, limited inventory, and ongoing economic uncertainty sidelined buyers. Home sales hit a seasonally adjusted annual rate of 4.02 million last month and were flat compared to a year ago, according to the National Association of Realtors. Although housing affordability has improved slightly in the past year, those gains haven't been enough to bring a rush of new buyers into the market. What's it going to take? Well, I think we all know. Somebody's got to lower the interest rates. California's Santa Clara County has sued Meta Platforms, alleging it has profited from Facebook and Instagram ads promoting scams in violation of California's false advertising and unfair business practices law. The lawsuit filed Monday today in Santa Clara County Superior Court on behalf of all California residents accuses the social media giant of tolerating fraudulent advertising on a global basis. The suit seeks restitution, civil damages, and an order prohibiting Meta from engaging in unfair business practices. Citing leaked internal documents first reported by Reuters last year, the complaint alleges that the company earned as much as $7 billion in annual revenue from so-called high-risk scam ads, which show clear signs of being fraudulent. Rather than undertaking a broad crackdown on fraudulent advertisers, the county alleges, Meta largely tolerated the misconduct and even established guardrails to block scam reduction efforts if they cost the company too much money. The click on one anymore. I certainly don't click on those ads. The dollar's flat. It's retreated from earlier highs after President Trump rebuffed Iran's response to a U.S. peace proposal, which of course pushed oil prices higher and kept concerns about an extended war intact. Trump's swift rejection came days after Washington floated an offer aimed at reopening negotiations, while Iran on Sunday released a response focused on ending the war on all fronts, including Lebanon, where U.S. ally Israel is fighting Iran-backed Hezbollah militants. President Trump, on behalf of a country that really likes you a lot, you've got to finish this job. Gold advanced as traders assess the latest setbacks surrounding the U.S.-Iran peace talks and its impact on reopening the Strait of Hormuz. Silver gained even more. Keep in mind, gold is saved, silver is used. And as far as we know, there's a finite supply of both. When God created the heavens and the earth, he shut down production on the 6th day, and on the 7th day he rested. So whatever he sewed up in the belly of the earth, that's it. That's all we got. Maybe someday we find something on another planet somewhere. I don't know. But again, gold is saved. In other words, well over 90% of all the gold ever mined still exists, whether it's in the form of bullion, bars, coins, jewelry. It's still here. Not true of silver. Silver gets used up. Now, there are some silver collectors and some who have bet the farm on silver for that very reason, scarcity. In 1921, Woodrow Wilson, the first of America's 4 transformative progressive presidents, became the first president to remain in Washington and make the nation's capital his permanent home after leaving office. In very mild defense of the man who did more than any other to establish the administrative state and thus pervert America's carefully constructed constitutional design. Wilson had suffered a debilitating stroke 2 years prior that left him partially paralyzed and nearly blind. He died just a few years later in 1924. Barack Obama, the man that won't go away, the nation's 4th transformative progressive president, following Wilson, Franklin D. Roosevelt, and Lyndon B. Johnson, had no such excuse when he and his wife Michelle decided, like Wilson, to similarly make the District of Columbia's Tony Kalorama neighborhood their permanent home after leaving the White House. Surely the physical proximity to the White House was one factor in the Obama's decision. The 44th president officially visited his former vice president there at least once, with perhaps other unofficial visits as well. The convenience of his physical proximity to the White House aside, Obama's residential decision has proven to be even more symbolically potent. The 44th president has declared that he's still here and he's not going anywhere. Some recent presidents, such as George W. Bush, have decided to ride off into the sunset and enjoy peaceful, private retirements after leaving the Oval Office. Bush even took up painting as a hobby. Obama is a golfer, but he seems to enjoy politicking and punditry more than around the golf. Unfortunately, the American people are suffering the consequences of Obama's insatiable desire to insert himself into the national conversation. He's been vocal in criticizing the Trump-era GOP and boosting Democrats on the campaign trail ever since making the 2-mile trek from the White House to Kalorama. Obama soared to the top of political world after his 2004 DNC speech. He vowed there was not a liberal America and a conservative America, but a singular United States of America. It's a poignant sentiment, but once in power, Obama ruled as divider-in-chief, and his first act was the infamous apology tour. Went from nation to nation, apologizing to them because America was so great. Not making it up. I'm not. I wish I was. Zoran Mamdani, is already having success in redistributing wealth right out of his city. It seems the socialist mayor's creepy video celebrating tax day and directly calling out billionaire CEO Ken Griffin as a target for a new tax may have backfired. While the slickly produced video where he gleefully spoke about taxing the rich may have been good short-term politics, but it could ultimately create a financial doom cascade for a New York City already facing historic budget crises. Where's those free bus rides? The grocery stores. He made an awful lot of promises on the campaign trail. Now he's just digging a hole deeper and deeper and deeper. Last on the news front, Congress quietly passed an Orwellian regulation during former President Joe Biden's term requiring all new cars to feature a kill switch, raising the alarm among some Republicans, but not all of them. Republicans like Thomas Massey and Chip Roy and Pennsylvania Representative Scott Perry have led the charge in the House to scrap the invasive regulation, calling it impractical and Orwellian. Yet in the most recent January vote to reverse the regulation, 57 Republicans joined nearly every Democrat to mandate that every 2027 model car have a kill switch. So what is a kill switch? This feature would use technology to assess the driver's performance and determine whether they are impaired. If the car determines the driver is unfit to be behind the wheel, the kill switch would shut the car off, raising concerns, of course, about safety, surveillance, and implementation. You know what? Big Brother might be a nice TV show. I didn't like it, but this is a little too creepy for me. We're already tracked everywhere we go, every phone call we make, this broadcast, you name it. It's all being documented to eventually be used against us. It's really quite that simple. All right. Let's talk about Logic 247. It's our 24/7 around-the-clock E-mini alert service. Now, last Thursday, we did something a little different. I normally do Logic 247 alerts prior to the Globex Open or shortly thereafter. But I held off Thursday because every Thursday night we have our members-only workshop. And I had been asked by one of our members if I would go through how I do the Logic 247 alerts. And so I did. And here's what happened. Okay. Now this says 5:25 p.m., but that's because I'm on Pacific time. So it was actually 8:25 p.m. Eastern. Telegram, the app I'm using right here, reads the clock on your computer. So based on whatever time zone you're in, that's what's going to show up here. If you're looking at this exact same thing on your computer, it's going to say 8:25. Now, this says 5:25 because that's my time. I'm talking about if you open up this channel on your computer with your Telegram, you're going to see. Okay. All right. So we put together 14 trades while everybody watched and listened in. The first one was a long, or to buy the S&P 500 E-mini futures at 73.83 with an initial target at 73.85, and then the next target or potential resistance was at 73.89. The next one was at 73.97, and the next potential resistance was at 74.04 and a quarter. That move took us to 74.02 and a quarter on Friday. That was alert number 22,238. So I did a long, now I did a long and a short of each of the markets that we cover, because I'm trying to teach all of our members how to be prepared for whatever happens. So many traders spend so much time and energy trying to guess where, and that's all it is. Is the market going to go up or is it going to go down? I really don't care. Whichever way it goes, I've got a valid trade opportunity. So the long on the ES made it from 73.83. It ran up almost 20 points to 74.02 and a quarter. The short never triggered. That's what the Z's mean. Never triggered. The long we did on the Dow, that worked out just fine. The idea was to buy 49,840, and we ran up to 49,874. The short on the Dow never triggered. On the Russell, we were buying 28.64 with an initial target of 28.66. The initial target is designed to help you get your goal for the day. With potential resistance at 28.78, we made it as high as 28.75. So from 64 to 75, that's 11 points. You only need 2 points to get your goal for the day. The short side never triggered. On the NQ, once again, the long side triggered. We were buying 28,800, and we ran up 29.5 points at $20 a point. Short side of the NQ never triggered. The long side of crude never triggered, but the short side did. We were selling 95.20. Gold, the long side, by 47.33, and it made it up to 47.40, right in there. So from 33 to 40, that's $700 per contract traded. Short side of gold didn't trigger. Silver did trigger on the long side, but not on the short side. And if you were not there Thursday night when we I painstakingly went through everything I do and think about and look at when I create these alerts. So if you missed the members only workshop Thursday night, if you're a member, the video is in the workshop channel. I highly encourage you to watch how we created each one of these alerts. Now, I'm getting ahead of myself, but last week was a good week. It was, I believe, a historic week. Last week, week 405, we issued a total of 71 alerts, 24 never triggered, 47 actionable alerts, and nothing stopped out the entire week. Now, this week's off to a bumpy start because we actually have had one stop out, I think, so far. So, I don't think we've ever had 0%. I'd have to go back through 405 weeks, but I think the lowest I remember is 3%. Over the last 405 weeks, well, actually, it's now 406 weeks, we've issued over 22,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, based simply on market structure. Thank you, Chris. It's a very simple process. You just got to learn to read the chart, and that is the purpose of the logic alerts, to help you learn how to read a chart so you know where to expect potential resistance, where to expect potential support. That reveals the windows of opportunity between those two important points. And, well, that's where you find your best high probability, low risk trade opportunities. Now, since the market opened last night at 6 p.m. Eastern, that's the beginning of the Monday session, and that's when we go to work, Sunday night, 6 p.m. Eastern, except it was Mother's Day, so I was very late getting alerts out last night. A lot of you were probably already in bed. I issued 14 alerts last night. At the time Valerie did the recap this morning, 6:30 a.m. Eastern, we were still waiting on the outcome of 8. That gave us 6 actionable alerts and 1 stop out. which is 17%. So we went from a week of 0%, and now on Monday we're at 17. What we've averaged, though, over the last 7.5 years and over 22,200 alerts is 20% or less get stopped out on average on a weekly basis. If you're looking for that holy grail where you never get stopped out, I encourage you, spend that money and hire somebody to teach you how to trade. Enough with chasing all these indicators and oscillators and bots and whatnots. You need somebody to teach you how to trade. How much time and how much treasure have you thrown at these markets? And are you any closer today than you were the first time you opened a chart? It's very difficult to learn how to do any kind of job without someone to teach you how. And that's what we do. We're in the trenches. We don't just sell you some indicators and give you an instruction PDF and wish you the best. We're actually in the trenches with you. 2 hours live every trading day in the live training room, but also around the clock and via Telegram. We provide support basically around the clock. So if you're sick and tired of being sick and tired, maybe it's time to do something different. When Michael comes on, he'll show you how to take the free trial. If you've already taken the free trial, it's time to make a well-informed, intelligent decision as to whether or not trading is right for you. Don't just keep throwing money at the market hoping something's going to stick, because it just doesn't work that way. So anyway, 406 weeks, that's a very long time. 7.5 years. But many years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of ways. The Logic alerts can come out anytime around the clock. The Logic alerts have an entry price, long or short, as you just saw, an initial target, then additional targets, and then a final trade to target. The CTAs are completely different. The purpose of the Logic alerts is to help you learn to read the chart. Of course, you can trade them. But if you never actually trade a Logic alert, you can still use them to learn to read the chart. Now, the concierge trade alerts, the CTAs, they're typically posted 5 minutes ahead of the Globex open. The Monday session we're in right now started last night at 6 p.m. Eastern. The Tuesday session will start tonight at 6 p.m. Eastern. Stocks close at 4 p.m. Eastern, but futures continue trading until 5 p.m. Eastern. Then there's a 1-hour break, and then the markets reopen. But last night, because of Mother's Day and my son's birthday and sometimes life gets in the way. Actually, that's not true. That should be the most important thing. I guess sometimes trading gets in the way. So anyway, it was 10:38 p.m. Eastern last night when I finally got the alerts out, and I was so tired I couldn't even get the date right. Where'd it go? There. So last night, now tonight, God willing, they'll go out on time, 5:55 p.m. Eastern. But at 10:38 last night, all of our traders had all of these targets: the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Again, there's a long target and a short target. Okay? I don't care which way the market moves. As long as it's moving, there will be trading opportunities. So as we go through the individual markets, you'll see these CTAs drawn out on the chart. Just remember, It was at 10:38 last night Eastern. Normally it's 5 minutes ahead of the Globex Open when our members have those targets. So let's get over to the chart. I'll start with the S&P 500, the daily chart, the bellwether. And what's our new? We keep putting in new all-time historic high, new all-time historic high, new all-time historic high, new all-time historic high. What do we got? 74.50 and a half. Probably should have just left it alone. What's that? 74.51, and what did I say? Come on. Yeah, okay, so I'm 2 ticks off. That'll work. Now, price always reverts to the mean. In our case, the mean is green. It's called the BBC. It just stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Lower prices, higher prices. It's pretty simple. What's important is the pullback to the BBC, or when price reverts to the mean, the pullback holds more often than it doesn't. A lot more often. All right, this is the 30-minute chart of the ES. Now, these are last week's weekly trading zones. The vertical lines separates today, Monday. This is Friday. Back here's Thursday. Back here's Wednesday. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. For over 16 years now, we've published the zones for our members. Now, last week, we did close just above the highest weekly trading zone for the S&P. We bumped up against it on Thursday, and then Friday we finally broke through. And we ended up closing right here, and we had a significant gap lower open last night. On tomorrow's broadcast, you'll see this week's zones. All the alerts I put out on Sunday night are based on last week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. So now every alert that goes out for the rest of this week will be based on the zones that were published this morning, and you'll see those on my chart tomorrow. So after the gap lower open, we didn't close the gap until the opening bell on Wall Street today. Typically, that creates the largest candle of the session. See, this was the open on Friday, the Wall Street open. All this happened overnight. The first candle, 6 p.m. Eastern. Okay. So anyway, we consolidated along the highest weekly trading zone from last week, 74.11/74.12. And then off the Wall Street open, we took off like a rocket. Now, we're due for a retracement. The black step line is about to cross blue and climbing. Notice on the way up how they're running parallel. Black step line is on the left side of blue and climbing. When the step line crosses over to the right side, as it did like right here. See how the step line was on the left side and then it crossed to the right side? When that happens, you'll typically get a retracement back to the BBC. Down here, the black step line crossed to the right side of red and falling, and what did we get? A pullback to the BBC. And the pullback held up here. The pullback held, the pullback held. The pullback holds more often than it doesn't. But eventually, it will trade through. look for a retracement. It's all we need is one more sideways consolidating candle, and that should bring the black step line to the right side of blue and climbing, and that's when you should see price come back. On the Dow, gap lower open last night. Red and falling, turned to blue and climbing, got us above the BBC, and then we got a leg and a retracement, and the pullback held. And then here's the Wall Street open, and ding ding, we hit the long target, which was based off the bearish cross from Friday. A bearish cross is when the red line gets below the green line. When that happens and it leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. The step line has already crossed blue and climbing, and we've already pulled back to the BBC on the Dow. The Russell gap lower open last night. This low right here buyers came in just before we hit this low right here. Okay, and just like the others, we consolidated, and then we got above the BBC, and we got to the long target on the Russell before the Wall Street open. The Wall Street open took us up to last week's highest weekly trading zone, 2890/91. Now, again, this is Monday, this is Friday, this is Thursday. Last Thursday, we got above the highest weekly zone. But by close of business on Friday, we will almost always be below the highest zone or above the lowest zone. Now, when price encounters a weekly trading zone, only one of three things happens. 70% of the time, it's consolidation. 20% of the time, it's rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens and the move runs out of steam, price will typically retrace back to the zone it sliced through and continue in the direction of the slice. But this sell-off was so powerful, it wasn't able to pull back to the zone. It just kept dropping, but look where it found support. So, here's how the zones are used. When price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Now, you're looking at the zones that were published last Monday morning at 6:15 a.m. Eastern. It's the carryover power of the zones. Here it is, a week later, and last week's zones are still doing their job. Okay. Gap lower open, right up to last week's highest. And now look, see the step line has crossed blue and climbing. So look for a retracement to the BBC. The NQ, gap lower open, sideways consolidation. Now the NQ was kind of interesting this morning. There's the 9:30 open. We had a big green candle. But look how it closed with just a wick. And then we did it again and even closed red. But at 10:30, the market came roaring back, but we never did quite make it to the long target. Maybe we still will today. Time will tell. Crude oil. Crude gapped higher on the open last night, and that gap still hasn't filled. We ran into the weekly zone, consolidated. Once blue and climbing gets directly above price, that becomes potential resistance because it's usually on its way to becoming red and falling. Blue and climbing is bullish, red and falling is bearish. And so here's an instance where the pullback didn't hold. We traded through, okay? This candle opened and closed below the BVC. But the retracement, the pullback held. Leg retracement, leg retracement. So here the pullback held, and it held until it didn't. And now we're at last week's zone, 99.25/99.30. On the upside, right there where blue turns to red, it's about $100.45. That should be potentially good resistance. If we get through there, then we should make the run all the way up to the long target. The long target was based off this bearish cross right here. See, this bearish cross didn't happen until this morning around 5:30 Eastern. So the long target now, Monday, Friday, Thursday, Wednesday. People often ask me, well, how far left do I have to look? Because it's all about looking left. You look as far left as you need to. And to establish a reasonable long target, I had to look all the way back here. Okay. The short target is based off this bullish cross from last Thursday. We didn't make it all the way down to the zone. We did get down almost to this bullish cross. But buyer stepped in early, and now we're just sitting at the zone. Gold gapped lower on the open last night, hit the short target and the zone. So we got a bounce, and then we hit it again. And then we traded through. Now notice, okay, we had a gap lower open, the pullback held, and then we traded through. And the high on the session for gold is 47.5840. Friday's high was 47.60. Today's high 47.58.4. That's just simple market structure. Now, this high that we had on Friday, okay, that was based off of Thursday, where blue turned to red. See that? That's what I mean about learning to read the chart. Knowing where to expect potential resistance, where to expect potential support, and then trading the windows of opportunity. That's where you find your best high probability, low risk trade opportunities. Leg retracement, pullback hill. Leg retracement, pullback hill. Leg retracement, we traded through. But then on the pullback hill. Just know that it holds more often than it doesn't. Now the black step line has already crossed blue and climbing. Price is attempting to get back to the BBC. Price always reverts to the mean. Now, if this pullback doesn't hold, right here you've got a bullish cross. We'll call it 46.96. That should be really good support if price gets down there. 46.96. Okay. Silver. Gap lower open last night, and we found support at a zone from last week, 79.60/61. You only need 2 pennies in silver to get your goal for the day. A $1 move is worth $5,000 per contract traded. So from 79.60 to 85.60, let's just call it $80. Today's high, 86.80. A $1 move is worth $5,000. This move is worth over $30,000 per contract traded. If you got in at 80 bucks and rode it up to 86, we did get to 87. Was it? No, I guess we didn't quite make it to 87. I guess that is the high right there, 86.80. But the step line has crossed, okay? So now comes the retracement, which should bring us back here. Now this is an important area right here. See how you got the wick sticking up and the wick sticking down? You just put your crosshair right between the two. 84.42 should be good support. But it's going to take some time for price to get down into this area, so the BBC may rise to meet price if we go into a sideways consolidation here. I'd love to see it make another run. Okie doke, Michael's here. He's going to give us a recap of everything that happened in the live training room this morning.
I will do that, and I fixed the spreadsheet finally.
Well, that's good.
420 partner, anyway.
Yeah, okay. All righty, well, it looks good.
All right, here we go. Let me see who is in here right now. Okay, I'm just trying to see if Nate was in here. I'm probably going to meet with him in a little while to get him set up with Sierra. So,
okay, good.
That's
great news.
I've been in touch with Bert too, so hopefully we'll get all this stuff going here today. All right. So, good afternoon, everyone. Today is Monday, the 11th day of May, 2026. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingIQ.com, click on the purple button. There is no credit card required for this trial. Once you click on that purple button, it's going to bring you to, this page right here. Did fix that less. I did. Good. I'm going to bring you to this page right here. On this page, all the way out is your name, your email, your phone number. Down at the bottom gives you TradingView login ID, right? That is the ID that you get when you hover over this. Right? It says you're logged in as something. Whatever you're logged in as is what we need. Okay? Give us that down here. Once you give it to us, then we'll set you up with indicators on your desktop so you can see what we're doing on your desktop, right? Same tools, same everything on your desktop. All right, results. Another day of like very little, but it was something anyway. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 11th day of May 2026. We're up 84 ticks on the NQ, minus 25 on the Russell, plus 32 on the YM, and minus 10 on the ES. That puts us at plus 330 on the morning session. Today it took 42 minutes. 42 minutes. Last month we had one 45-minute one. Sorry, we didn't make it any worse than last month. 42 minutes and 7 trades to get to $1,050 a contract. What did we get at the last time? 15. It was something with a 50 in it. Anyway, we took a total of 18 trades this morning with 3 stop outs, and I didn't miss much. So 83.3% of my trades were break even or better. On the month now, we're at $2,932.50 over 6 trading days, averaging $488 per contract per 2-hour trading day. We're in the 11th day of the month, and we've only traded 6 out of the 11. And they were actually available for trading 7. Okay, so that's not bad. Yeah, that's pretty good, actually. So we're averaging $488.75 per contract per day. That is really low. I mean, it's good. It's great. I mean, it's 4 times what we want to get. It's 4 times the goal for the day, but still, it's a really low number compared to what we normally get. So the markets are everybody's just sitting on their hands, waiting to see what's going to happen here. It's Ariel 11. This is not Ariel 11. That is Calibri. Okay, make it Arial. There you go, not bold. All right. No, that's permanent. All right, so we're on the month, we're at 29.3250. On the year now, we're averaging $1,078 per day. Again, that's like $122 less than what it normally is. At $81,985 at this point in the year. $81,985 at this point in the year. I want to go see where we were last year at this point. Last year in May. Well, 50, 120. We're at 120,000 roughly. 110,000 probably. So the numbers are just way off. And they're not off because the trading's gotten any worse. I mean, you can see the percentages are still great. All these percentages are still great. It's just we're not having as much opportunity. Anyway, that's wages. All right, so let's get in there and go over the trades that we did do, didn't do, and all that stuff. Let me hit save right now and move this out of the way in case we get any trades while I'm yapping. This is not going to be a trade here because we didn't go full cycle on the last one. This is not going to be a trade here because we didn't come out of the overbought. This is not a trade yet because we didn't get into the oversold, and this is not a trade. This was actually a trade right there on the Russell. So the Russell one you could still do right now if you wanted to. The ugly part about this is it's got lower highs and higher lows, so it's jammed up in a triangle right here. Now, let's get into the trades that we actually did do today. All right. Let's see. The Russell. We had one trade on the Russell and we stopped out. That was it right there. Minus 25. Okay, that was our one trade on the Russell so far today. And was that the only valid trade? Looks like that could have been a trade right there that I missed. That would have stopped out. That didn't hit the mid band. This right here was a trade that would have worked out, but I missed. That was it. Very little trading today on the Russell. Okay. Again, I was mentioned last week, I was talking about going down to a 9 range instead of a 19. Let's see what kind of trading there was on a 9 range today. Still very choppy all through here. There's one. That would have been a break even. That would have been a good trade. There's a couple more opportunities in there. I think it would have worked out better. But anyway, let's go back here to the 19 for right now. That's what my DOMs are set up for. And we'll go to the YM. The YM only had a couple of trades too. Actually, the YM had 4 trades. And this is not a valid trade here because it didn't go full cycle. So on the YM, our first trade on the YM, we picked up 5 ticks. Then the next one, we picked up 8 to get us to 13. Then went from 13 to 27, and then went from 27 to 32. And that was it on the YM. And let's see as we go through here if there was anything else. There's a trade right here during the break. Trade right here during the break. Trade right there during the break. Those other two would have been good. This would have stopped up. And this, if it would have gone full cycle, you'd have a trade right now during the break too. Okay. And that was the YM. Now the ES. We only had a couple of trades on the S. We had this one right here that was a stop out, minus 10, and this one here that was a break even. And were those the only trades on the S? I think there was one trade that I missed on the S. This one right here. That would have been, it gapped up. It would have been a good trade right there. That was at 927, so I was just getting on at that point. And That a trade? That was a trade there that I missed. I would have stopped out. And that's it. Not a whole lot. We're at a point right now where we could have a trade on an up close, I think. Do we have flat in the bar before? That's the key thing. Yes, if we've got an up close on this bar right now, you can't get below 37.75. 38.50. Okay, so 38.50 up to 40.50 is what you'd be looking at on the ES right now. Okay, 38.50 up to 40.50 on the ES would be a long trade right here. Again, this is kind of ugly because you have lower highs and higher lows, but that's the way all the markets are right now. All right, and the NQ, we started out with the stop out on the NQ. That's why it ended up taking so long to hit our goal for the day, right here. Bang. Minus 36 ticks on the first one, and then we had a whole bunch of 10 tick trades. 10 there, 10 there, 10 there, 10 there, 10 there. Then we finally had one that was more than 10. We had 16 there. That got us from 14 up to 30. Then 10 there to 40, then 10 to 50. Then we had a 24 tick trade that got us up to 74, and then 10 to 84. Okay, and that was it. During the break, it looks like nothing during the break. All right, the ES trade never happened. I guess I can cancel that one now. The Russell trade that triggered back here a few minutes ago, just as we were getting on here, that I believe will be going right now if you get into it. I'm not exactly sure. But that wraps it up for the recap for us. So we ended up with 84 on the NQ. On the NQ, we had 11 trades, 1 stop out, then 8 trades that were plus 10, I think, and 2 other trades that were not plus 10. So going to plus 10 is, well, it's working for me. But we're minus 25 on the Russell with our 1 trade there, plus 32 on the YM after 4 trades there, and minus 10 on the ES, just 2 trades on that market. So things were incredibly slow this morning, incredibly slow. All right, back in here. Let's see if we got anything. Here we are, right here on the YM. Look at there. Here on the YM. Now, did it already go 5 ticks into profit? That's the real question. The open was 90, the low was 80. So yes, it already went 10 ticks into profit. So it's late to get into now. See right here, the down close right here as it came out of the, oh, I'm sorry, that wasn't a valid trade. That's why I was saying that earlier. It didn't go full cycles. That wasn't a valid trade. It did go 10 ticks into profit though, but it wasn't a valid trade. Chris B, you told me before on this how to set it up so it automatically goes down to the bottom. Some set line number. Wasn't that you? Yeah. Wasn't that you who told me how to set that up? So it was something up here. I mean, it was a year and a half ago. So it goes to a year and a half ago every time I bring it up. You know, if I go in here and I go to TIQ and I bring up recap results, this number right here, the 4091 to 4091, it brings it up to 4091. Okay, well, this is what it was. So I guess I just need to change this number here to the current. Copy. Right, and get rid of that. Go here, do this and that. Where were we? We're at 55.64. So let's do this. Oops. Okay, now if I star that, stick it in there. That went in the ABC one. So if I get rid of it here and I go in here and I go to the ABC one, all the way down to the bottom and click on that. There it is. Look at that. I figured it out all by myself. But you gave me the path to begin with. I'll give you credit. Credit is due. All right. So this one here, I can just delete. And then go in here, go here. So I can get rid of all those now because they all go to the wrong place. So delete that one. Delete that one. Grab that one, bring it way up here. I'll scroll down to the bottom every time. And copy it. And paste it over here. That's the old one. That's the new one. Okay. So now if I go in here, that's the new one. Delete that one. Look at there. I just did that all by myself. I am trainable. All right. Neat. To enable. Okay. Neat, you are not in here. All right. So I am waiting. So we're just waiting. It's 1:19, so I didn't even go in here and fill out this part of it because I didn't think we had a trade the last time either. 5-5, no 5-6. We didn't end up with any trades. We had 18 minutes, so this time we'll just say we have 15 minutes. I think that's about right. Okay, we could have a trade here on the NQ. The down close on the NQ would be a trade. Okay. So it's got a high here of 390.75. Now that's changed a little bit. 391.50. Be selling at 81.50 right now. on the NQ. That is true. All right, we ended up with nothing on the NQ, but we might get something on the ES now. Okay, we might get something on the ES. It has a high of 39, so we sell 37 on that. If it goes up higher, then we'll sell higher. But right now it's 39 down to 37. Now it's 39 and a quarter down to 37 and a quarter. 39.50 down to 37.50. All right, we'll see you later, Chris. $39.50 down to $37.50 is what we're looking at on the ES right now. Okay. And now that number has changed to 39.75 down to 37.75. It's the only one that's near a trade right now. We have 6.5 minutes left. It's the only one near a trade right now. And if it gets above 40.75, it will not be a trade. It's dangerously close to that right now. Nope, it's not going to be a trade. Cancel. Cancel all. All right. Well, it looks like things are going to flip the YBRs up here. So we're going to start looking for long trades here in a minute. We still have a solid 6 minutes left, so we could end up with a trade here. It's possible. It could happen.
You know, markets are pretty quiet around the world.
They sure are. Pretty quiet in here too. Thought we were gonna have a trade there for a minute, but it's not looking good. We have 5 minutes left now.
Asia was quiet. Europe was pretty quiet.
well, everything's in the green now. So we're looking for long trades. We could end up with a long trade here. We now have a solid 4 minutes left. Let's see what happens with that. Mm.
So how was your trip?
It was good. It was good. We did a lot in a very short amount of time. And it's good to be home. We had good interaction with everyone. It's funny when when we're the only ones sober.
Yeah.
Show these kids.
Changes the perspective a little bit.
Yeah, it does. It does. We still had a good time though. We were able to do all the same things, just sober.
Mm-hmm.
And I think the kids all had a good time. I call them kids. They're all in their 20s, mid-20s, low to mid-20s, all of them. But
yeah, Gabe came over yesterday. He's spending a couple of days with us. He turned 24 on the 8th. Yep.
And Jake came over yesterday. He was here with his girlfriend, Abby, for a couple hours. Came over and had dinner. And he said he will put brakes on my truck for me while I'm gone this weekend.
Nice.
So that's good. Yes. So I guess I could just buy him and have him delivered to him. I don't know. We had a little ethical dilemma, Jada and I did. Because I know Jake's been wanting to get himself a handgun for, now that he has his own house and stuff. He doesn't have one in the house. And when he goes camping and things like that, he always used to just take mine. But we had that friend of Macy's brother committed suicide 2 years ago. And so that kind of weighs heavily on Jada about Jake having a handgun. I mean, if that's ever going to be an issue, handy isn't going to be the thing that makes it happen. But I had, before Jake had actually mentioned it for his birthday, I had gone and I picked one out for him, and I actually put a deposit on it because I wanted him to actually go and fill out all the paperwork and buy it.
Right.
And but I picked one out for him and I put a deposit on it so that we could go together and he could just do the rest of it. And I told Jada I did that. She's like, well, I'm not so sure about that. But I hadn't said anything to Jake about it. And then out of the blue, Jake said something to me about it. About wanting something like that for his birthday. So now, the ethical part, really, for me, is whether I just say, well, I already did this, Jake, and you can just go finish it yourself. And not say anything. Jay didn't just say Jake went and got it on his own. Or just put it out there in the open, which is what I'm going to do. But still, it's a conversation I'm not looking forward to having. But he is going to be 22, so he can go do whatever he wants. All right.
How's
It's time,
how's your
Dwayne.
other kid doing?
Mine?
Mm-hmm.
Owen or Lexi or
Yeah.
okay, I guess. Got married.
Really?
Oddly, to a boy, I think.
Really?
But yeah. I see things on Instagram and stuff like that. But only contact when they want something. I'm always there. But anyway, that's a whole other road of stuff I don't know about. All right, so let me go here. If you have not taken a free trial, let's go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. We end up with no trades again. This is 2 days in a row. We end up with no trades. Go to mytradingiq.com and click on the purple button. There's no credit card required. It's going to bring you to the registration page. On this page, just fill out the form down at the bottom. Put in your TradingView login ID. Hit register. Once you hit register, we'll know that you took the free trial and get your indicators indicating for you on your desktop. Okay? All right. That is it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, looking over South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, I'm ready. Recap of the morning session.
Today, it took 42 minutes and 7 trades to get to $1,050 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, I covered every one of the markets in granular fashion. ES overshot the long target. It is due now for a pullback. The Dow hit the long target, and that's as far as it's gone. Russell exceeded the long target and found resistance at last week's zone. The NQ still hasn't made it to the long target. Really quiet day for the NQ. Crude is up against last week's zone, 99.25/99.30. Gold is in the process of making its retracement to the BBC, but the top side of the long target may hold as good support. Got blue and climbing directly overhead, so that's potential resistance. High of the session for gold was 47.58.40. And so we're trying to rally here. The step line crossed, pulled back to the zone, and looks like it still wants to move higher. So anyway, as soon as I sign off, 10 minutes later, you can go to youtube.com/CFRN. You can watch all of today's broadcast in its entirety, or you can fast forward to whatever part strikes your fancy. There's over 3,000 daily episodes archived at youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. So let's wrap it up with our good word for today. When you long for companionship, Genesis 2:22. Then the Lord God made a woman, and he brought her to the man. God recognized our need for companionship when he said, "It is not good for the man to be alone." Then God made a woman, and he brought her to the man. Most of us are social beings who are at our best around others. We garner energy and support from them. But there are those who feel a sense of shame over admitting their loneliness. They long for people to share their lives with, but feel they must pretend that they don't need anybody. You should not feel shame for wanting love and social connection. Admitting your desire to be loved and taking a step toward involvement actually requires courage. Accepting that you are a person who needs to connect is healthy. Problems arise when your need for companionship controls you. When you compromise your values in order to be accepted, the results are always negative. Clinging to other people without understanding who they are or what they represent is unhealthy. And the ramifications can have not only lifelong effects, but sometimes life-threatening consequences. Wise decisions about relationships are never to be made with a mind ruled by fear of loneliness or desperation. If that's where you are, being single is a better alternative right now. But it need only be temporary. So do these three things. 1, ask God to guide you. God sets the lonely in families. Psalm 68:6. Live by the values you'd want your loved one to hold as well. And 3, start with what you have to give and share with others rather than with your unmet needs. Live the life that you know you should live, and in His time, God will bring you the right partner. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.